Hi everyone, it's Stuart here, and welcome to the proptrade.com. It's Fed night, excuse me. Market is completely priced in 25 basis points here from quite a divided Fed. Oh, we'll see actually. We'll see who joins Stephen Myron, Trump's boy, on the Fed with regard to dissenting. It's likely that he's going to go for a 50 basis points hike. See if anybody else joins him. Remember, we had Waller and Bowman looking a bit more dovish last time. But will not last time before last. Last time they all sort of stuck together, and it was only Myron, the new boy, that went for the bigger hike than the bigger cut than we got. But 25 basis points, more or less pricing as far as the market's concerned. Gold this morning went down to 3,900. We've rallied $100 to 4,000. Couldn't hold that earlier today. Topped out at 425, $4,025. And then we've been down this afternoon into this key decision. And we're testing the 1 hour 20 period moving average there on the middle of the Bollinger Band there on gold. I know a lot of you trade gold. This strategy would have been short from, you see the cross there, would have been short on that candle there at 1 o'clock this afternoon, and would have gone short at 4,015 and 79 cents. And so far, we've just hit target one now. So target one is the midline on the Bollinger Band, the 3989. So we'd have got in at 4,014. We'd have got out at target one. That's half of our position would have been closed using this strategy on the hourly basis at 3989. So a nice move down. Target two is obviously the bottom of the Bollinger Band. Whether we actually get that, of course, we'll see. So many of you would have taken out more than 50%. Indeed, when I first started using this, I was taking 80% out on target one and leaving 20% on. And this is, it's on a weak market, isn't it? If we look at the higher time frames for gold still, the 4 hours, that big move down. We've obviously had the huge shakeout on the daily just over a week ago. Massive candle last Tuesday, and the breach of the 4,000 level we saw on Monday, and bounced, moved down again yesterday into that 3.9. We've done 3.9 again today, and we're up for the day, but we can't hold 4,000. So anyway, that's gold. Obviously, a lot of you let me know. Keaton, hello, good afternoon. Hope you're well, and things are looking up for you, my friend. And how you're trading. I don't know if you trade gold or you trade Forex. Let me know what you think. But really, all eyes on indices. The stock market's at all-time highs today again. This is a daily time. This is the NASDAQ 100, 26,100 has been breached. The DAX isn't playing party. The FTSE is at all-time highs again. Another big, strong move for the FTSE today, 9,760. S&P 500, the world's most important stock market. Don't forget, my friends, 6,900 has been breached today. We'll see if this cools at all, but the rally continues. We've got some massive news after the market closes tonight. We've got Meta, we've got Alphabet, Google to you and me, all reporting their earnings, and then Microsoft with that big deal, that reorganization, the deal with some of the company of the moment, OpenAI, yesterday. Microsoft, massive investor in OpenAI, and benefiting from that is a key thing. God's Battle here is saying volume is one of the key things. Absolutely. I have a good friend of mine, is a big preacher of volume price analysis, Anna Cooling. If you're new to Forex, still, she wrote it, I don't know, the best part of 8-10 years ago, I think now. Introduction to Forex by Anna Cooling. If you're new to Forex trading, it really explains things nice and simply, clearly, very simple. And she's here in the UK, her and her husband David, big mentors of volume price analysis. Volume obviously comes in when you're using something like the VWAP. I don't know if you use VWAP, God's Battle. Interesting handle name you got there, my friend. But if you look at the VWAP, remember what VWAP is? The volume weighted average price. So it's a bit like the moving average. I know aficionados of VWAP hate me say it. Every time I say that, I get pulled up on it. But you combine VWAP with Heikin-Ashi candles that I have here, and you get a nice smooth when markets are trending like we have with the stock markets. It keeps you the right side of that move. Very, very strong moves there. You can see that's a 4-hour chart on the Dow. The hourly chart a bit more choppy today as we've rolled over from all-time highs. But if we got the daily time frame, you see it's unbroken rally here for the this second half of October. Well, unbroken rally as far back as we can go to the April nadir. Really, we know we've rallied, cooled, rallied, cooled, rallied, cooled. It's just cyclical, and off we go. Can it go on forever? Well, we're entering in a really typically seasonally strong part of the year. I use the volume profile. Okay, understand. Absolutely, it's very, very popular. It's very successful for many people as well. Volume profile, God's battle. But do you use it on a short term, long term? I mean, how do you apply it? Because if it works for you, that's fantastic. Because that's the most important thing. Finding something that works for you, finding the time frame that works for you, the asset that works for you. Because some strategies don't work across all assets. But I'm a big end of day. Typically is where most of my hard-earned personal cash is put to the test. I do like trading the open, as if you've been watching any of my videos recently since the shutdown's been on. I do like trading the open, particularly in Europe. I trade the DAX and the Dow. Just cost per point, and the amount they move on a daily basis, it's the best value of the major stocks. Stock markets is the DAX, the NASDAQ to a lesser extent, and the Dow. They're the three I like to trade on a short-term basis. So I don't know how you use it. So God's what you're saying here, my friend. Short-term for scalping, especially for indices. Yeah, well, that's what I do, certainly on a short-term basis, and certainly around the close and the open. And the Dow is my preferred. So I tend to typically 5-minute time frame. So what's this telling me? Well, this is telling me now, again, I don't know if you use the VWAP, my friend, but this is telling us we've had a strong day and we've come back to our average for the day, unsurprisingly, ahead of this major announcement, and the news has just come out. So let me just go back to the news polls. One's expecting, given that move there, if we just go back to the minute chart here, using the Dow as an example, not really moved, has it? Hasn't really had that much of an impact as the news is broke. It's probably what the market was expecting. We look at the dollar crosses. If we look at the euro dollar here, down on the minute chart again, not the move, a sort of move you would expect. Even here down on the 1 hour time frame, the 1 minute time frame, that's not a massive move because the market is priced in what the Fed was going to do, and that is to, I'm pretty sure, to keep rates cut rates by 25 basis points, which has just been announced in the last few minutes. So Fed says Schmid dissented in favor of a no change. So there we go. So we have had a bit of a dissent. So we've had a 25 basis point cut, but understandably, again, depending on where remember the Fed's two-pronged targets. They've got to look after price stability, i.e. inflation, and then they're looking to get a fully employed US jobs market, so the labour market. So that's their two-pronged meaning for being in existence. So depending on how you're taking those data, whether you're looking at the inflation thing, which still looks relatively benign, they're talking about a one-off hit from tariffs, which we haven't actually seen feed through, or you're looking at the weakening, quite significant weakening of the labour market. It's finally starting to crack, but again, the official data out of the government, we haven't had any for 28 days. We haven't had any for over a month. So depending on what side of the bargain you could take, I understand Myron's desire to cut rates quickly, but this big beautiful bill that Trump's pushed through, potentially benefiting the better off than the weaker members of society. But yeah, Myron's looking for 50 basis points. Schmidt has said no cut whatsoever, but the consensus has been, as things are on central banks, has been 25 basis points. So that's what's come. The euro's a tad weaker, not particularly much, to be honest. I think Schmidt's is probably dissent is probably a surprise. Wanting for a no change, but so euro dollar's a wee bit spiky. But again, guys, look at this how the spreads move when we have major announcements like this, especially on something like with when you're trading with the Heiken Ashi candle as well, because the the candles use a different calculation to produce their candles than a standard candle. But if we just go back to my mean reverting strategy, which is sorry, I didn't mean to make a copy. I want to open a new light. Botch. There we are. Which is what my friend has been saying about. Yes, Dow is great for mean revert. Indeed, it is, and that's how I like to trade it as well. But so here, this has been long. That's looking for a short. That's looking to short there. So I mean, if you wanted to trade the in fact, it's an hourly candle, isn't it? It's not the 5 minute. I thought it was the 5 minute. There we are. So the trend is to the downside. This is looking to try and get some mean reversion. So we've got a cross of quite a weak cross there, but it's in the here. But obviously that was right before the data came out. We went all the way down. We've been as low as 116.36 for the euro. So this strategy is looking to now go long. It's probably, that was the first indication there. That's similar. So you can see that there's a weak cross there. It hadn't actually crossed there. The cross is there at the data. So whether you caught the bottom there, but you can see how tight the spread is on the euro there with us here. So this would have gone long around about here. So whether you got in on that, but that's triggered a long position. Let's say we get in on this one. My trend signal detail is not moving. So I've got just some basic volume. You're talking about the volume profile. I've just the volumes. I don't know. Is this the one you use or the fixed range? I mean, what volumes do you use? So there's our. You can see our points of inflection here at 1646. So we may be going back to that level here with your data. So I'm just going to take that off. Okay, so there we go. So simply on this strategy, that's looking to go long, but obviously that's a bit. The big surprise has been Schmidt dissenting. So I'd be long there. God's battle. I don't know what you're doing if you've gone off to do some trading of your own. Oh, well and good, my friend. So dollar continues to hold up in the immediate aftermath of the move here. Sterling's been particularly weak today. Aussie and CAD have been strong today. We just go through the major dollar crosses. Swiss has been quite weak as well. So these are all hopefully all the 5 minute timeframes. There's the volatility, much more volatility there on the Swiss franc as the data came out. Perhaps less people trading, but that's again that would have crossed to go short. But let's wait for the noise of the data, even though it's very much in line with expectation. I say the only surprise has been Schmidt voting for, well, not a surprise really. It's sort of somewhat expected that somebody may go that way. Let's just have a look at the statement whilst I've got you here as well. I've just found a statement here on their website. So we have cut by 25 basis points. In light of goals, assessing the appropriate stance on monetary policy. Oh, sorry. The other thing, again, which was expected, was the QT cutting of that. That is going to end by the end of November. The 1st of December, QT will be thing of the past. The committee decided to conclude the reduction of its aggregate securities holdings on the 1st of December. The committee is strongly committed to supporting maximum employment and returning inflation to its percentage 2% objective. There you go, standard statement. And there's the two targets that the Fed have been targeted with. So so as I say, the rest of the meeting has gone in line. So Waller and Bowman, Michelle Waller, Chris Waller and Michelle Bowman, the two dissenters from earlier in the year, the first people were sort of throwing their hats in the ring of the next Fed chair, have stayed with the committee. It's not necessarily probably a good sign for Waller's, not his appointment as Fed chair. That seems to have gone out of the window completely. Interesting chatter today. I was listening to some of the commentators on Bloomberg, and they were talking about potentially the longer this goes on, that the Treasury Secretary himself, Scott Bessent, could appoint himself, or Trump could appoint him, or nominate him as his new Fed chair, which would be a proper cat amongst the pigeons decision. But whoever gets it, they're going to be more in line with Trump's ideas, and 3-4 basis point cuts perhaps next year. Obviously, the shutdown of the government. The issue there is perhaps puts the what markets are still pricing in as the next cut at the next meeting in December, puts a question mark over that. And with Schmidt actually dissenting in the vote, that could add to that or the unlikeliness of that happening, or increasing unlikeliness of happening. Before the vote this morning, when I looked at the FedWatch tool, if I just bring in the FedWatch tool here, from the CME group, we were 85. In fact, it's gone up a little bit. It was 85.4 earlier today when I looked at this. It's now 85.5 and 14.2 for another. So it's 85% chance of another 25 basis point cut still. We are 10 minutes into the decision, so some will have filtered through this. But if we look at this last week, it was all the way to 95%. It was very much nailed on. So that has weakened, and with Schmidt dissenting and nobody else going for to not moving at all, nobody else going with Myron for the 50 basis point cut. The likelihood of December might start to tail off if the shutdown continues and the real government data continues to be sort of held up and not out properly, and they're on relying on private payrolls private institutions' data, or universities' institutions' data. Interestingly, talking about private payrolls, the ADP, the main private payroll provided in the United States, talking about issuing it on a weekly basis now. But remember the weekly claims we get every Thursday that we haven't had for 4 weeks now. They're talking about issuing it on a weekly basis, and they're giving some sort of estimate. But again, some of their estimates have been very poor in the past. So as you can see, likelihood of a 25 basis point cut in December a month ago was only three quarters of chance, 67%. We've been all the way up to 95% a week ago, and I say that might slip a bit further from 85. Obviously, may go the other way. What do I know? To be honest, but I don't know when that was the last refresh. But obviously, this is just a cheat. This is a free internet feed, so it's nothing that's paid for. So I teach it with a pinch of salt, and it is 15 minutes delayed as well. So there we go. It's actually gone up to 92% from that, which is quite interesting. So perhaps there's something in the water there. Is that the? Hang on, let me just make sure that is the December meeting. No, there's a December meeting at 84.6. So it's actually ticked up a tad, hasn't it? From earlier. I'm surprised that's actually gone up. But anyway, let's go back to the market, see what's happening. So dollars continue to bid here against the Swissy. Yen has been very much in focus, coming back after lots of back patting between the new Prime Minister and Mr. Trump, President Trump. So dollars up in the last hour or so. And 52.50 has been 152.50 has been tested, key high area here. So look up to the hourly time frame. See there, top of the Bollinger Band on this hourly time frame. So maybe some resistance approaching as we get to 152.50 there for the dollar yen. CAD, obviously dollar CAD. CAD's had a good day with that 25 basis points cut from the Bank of Canada earlier on today. Dollar CAD has come all the way down to 138.80. And the Fed cutting has lifted the dollar, and we're back at 139. So the rally to check this up. Oh, that's the one I will check. Check this up to the daily time frame. The rally to 140 we saw last week has cooled, and it continues to cool. So overall, we are still on a down day for dollar CAD, but we've gone from one side to the opposite side of the Bollinger Band in the last 12 days. And there may be some buying down here at 139. So 139, you see the pivot area here for dollar CAD. And then the next one is down through there at 138.50. So two significant levels. So 139 holds, we might take back up. We breached that. That's where the momentum seems to be going. And we're back to this 138.50 level for dollar CAD here on the daily time frame. But see, where we end up for the end of the day. The 4 hours already tripped that way, I would guess it did. Now it's bouncing back that's the current candle and the bounce back from the Fed announcement, and that's surprise. I'm still calling it a surprise, and it was a surprise for me. So what do I know? But Jeffrey R. Schmidt, who preferred no change to the target range for the federal funds rate at this meeting, and Stephen I. Myron, who wanted a 0.5 percentage point cut. So there we are. That's still, that's still trending short. I'll be looking to try and catch the bottom on that one anytime. But clearly, some buys at 139 for dollar CAD traders. Euro, we were in earlier, weren't we? 116.41. So chopping a bit higher. We'll come back to that in a minute. Aussie back to 66. Aussie's had a really strong day today. We had that hotter than expected inflation this morning. Let me show you on our calendar if it's going to work. Not too much going on this station at the moment. Just look at today. Yeah, it's going to take a while to fill, isn't it? Just today. There we go. So let's pull that down. So this was CPI from Australia this morning, hotter than expected, 3.5%. On the September number, trimmed was at 3% and the weighted at 2.8%. So it's hotter than expected across the board for the Australian data. That lifted the Australian dollar this morning, and it's held on to that for most of the day. It's one of the best. In fact, that's probably the best performing, if not the along with the CAD today. Earlier today, we got the Bank of Canada. As I've just said, cutting rates again as expected by 25 basis points down to 2.25. I mean, President Trump was screaming, look what they're doing north of the border, won't he? And the home sales numbers were okay. And a huge drawdown on crude inventory. We had a bounce in the oil market as well. We'll come to that in a minute. I know some of you do trade oil, not many of you, but most of you obviously are down there with the gold trade. So 4%, as we've just seen, 25 basis point cut from the Fed. No surprise there. And Aussie dollar, the best of the major currencies today, back to 66. Whether it can hold it or not is a big question. As we can see here, this is the 4-hour candles taking us back to September, the beginning of October. It's struggled at 66. So we may see some selling there. I mean, at first, that was a significant short candle there on that 4, and it didn't happen. That was this afternoon's rally to the upside. So that's still going. That's very much up there on that 4-hour time frame. although it's bursting out. We got a very steep Bollinger Band. It looks quite overbought, but it did get to 66, and now it's running out of steam. We're back to 66. It got as high, in fact, as 66.16. All the sixes, not the sign of the devil, but all the sixes. So there we go. God's battles. Oh, he's disappeared. I bored him, obviously. He's going to do his on train now, hopefully. Sterling 132, very much under the cosh. We got short on this. I can't remember. I've got a line in there. I can't remember. What our open trades were. Well, no, it was pound yen that was in and out. Yeah, I'll come back to what we've traded so far this week in a minute. But so much data to get our heads around. All sorts going on, and that's looking actually. They're not 4-hour time frame. It's looking to go. No, it hasn't crossed yet there. So it hasn't crossed there. Let's see. We're out with the Bollinger Band all that way down. So it's still the trend has overtaken the mean reverting strategy. We come back to the daily time frame. It's been a very weak couple of weeks, or last couple of weeks of October for sterling, having got to 135 earlier in the month, and we're down now today at 132. So big move down for sterling. 132 last time was there was buyers down here, so we could be seeing that at the end of July. It's a key level as we were going up. 132 here. See, there's that 132. So key level. In fact, I'm going to put. It's not going to hold it, is it anyway? But you see what I'm saying. Channel sort of bound, but buys to the downside again, and we have been for most of the second half of September and all of October as we've looped lower sterling. Consequently, we've seen this record high in the FTSE. Some negative correlation between cable or sterling and the FTSE, because something like 80% of UK companies that are on the FTSE earn their earnings in other than sterling, so they have to repatriate it. So weak sterling helps the FTSE. So 132 key support level for cable going forward. And finally, Kiwi 57.85. Kiwi, like the Aussies, had a good day. Not as good as the Australian dollar or the Canadian dollar. Haven't had the big news that those two currencies have, but continues to tick higher against the US dollar. So over the 20 interesting break over the 20-day moving average into the upper half of the Bollinger Band here on Monday. Stronger day yesterday and doing okay today, but again at a bit of a resistance area where we sit here at 57.80. So getting to 58 is a bit of a step too far. We went to it this morning and then we've come back down from .58. But that's the next upside target for the Kiwi. See here, there's very weak touch, but certainly that would have here on an end of day basis. You'd have that the mean reverting traders on an end of day basis here using this strategy have been long from the 17th of October, and they're nicely in the money from an entry at what is that 57.23. We're at 57.85, so only 50 pips. It looks a lot, doesn't it? But it's quite a significant move for the Kiwi. But there we are, up. Is that only 57? And that's still 57 to the upside. We had a look at the indices earlier with a bit more detail. Gold, as we said, see how it's reacted any further to that Fed announcement. So an update today. It's the daily candle. Let's come down the time frames. In fact, let's come. We did the 4-hour, didn't we? Still negative. Ran through 4,000 earlier today. Couldn't hold it in the European and the US session, and we've been down from the European Open. The resistance at the 20 period moving average here, the 4-hour trade of 4,000 hasn't held. And we trade at 3,985 at the moment. So the 1-hour strategy looking quite positive this morning in the Asian session, even to start the European session. But we topped at, as we said, we showed you earlier, anyway, 4,025. Significant resistance through the European morning, and then down this afternoon and breaching. Currently, in this hourly candle, might add some more shorts to that, as on the size of that candle to the downside here at this 6 o'clock candle, moving low. There's the touch of the outside of the Bollinger Band. There's the cross of the K and the D line on this strategy setup. So you would have got, that's the cross there. You wouldn't have gotten, you'd have got, that hasn't happened on that one. You would have gotten that way. So again, short from on a end of day. So we've had to wait, we first touched the out of the Bollinger Band here at 7 o'clock. So it's 1, 2, 3, 4, 5, 6, 7 hours. I know a lot of you can't cope with that until we crossed. I mean, it's a nice cross. It's in the overbought area. It's the highest we've been for a long time on this time. Look at the K and the D line, how high we were up here. It's 90 something. It was 94, 95. So we haven't been up here for a while, but it's a clear, strong cross here on the at 2 o'clock. Come back from lunch, and we're in the money from 4,012, and we're now at 3,980. You've got to take some of your profit off as we've gone through the 20 period, the midline of the Bollinger Band, but it's running to the downside. Keep your stop loss not too close, obviously. It'd be round about entry still with that the viciousness of the Fed if you still have that open under the Fed, but certainly in the money, short in gold on that 1 hour time frame, and more so as the time frames come down. So 30-minute, it would have triggered earlier. You can see there we are. You see the cross was there. So there you go. 30-minute was there. So you got in earlier. So that's the hourly guy getting in. The same guy, trader, I should say. Excuse me, ladies. Excuse my home for 4,023.85. The 30-minute traders got in. You see, same principle. Then there's gap through there at 3 o'clock. So you'd have got in at 10:30 on the 30-minute. The 15-minute trader, and he's a bit more choppy. Well, obviously it's 15 minutes, isn't it? So we touch the outside. We're going up there. We're cross. Ooh, it's a bit messy, isn't it? We're still going up. Might have got stopped out if you depends where your stop loss was. But the cross, the blue clearly is about there, really. First, it's a not great move. It's still going up, isn't it? So even if we'd got in here on that candle and you put your stop loss up, stop loss might have been up at the Bollinger Band above, because it was still going up, wasn't it? It wasn't that clear. It was. You might have. I mean, on the 15-minute, you might have waited a bit further till we come out of the overbought zone down to 15, but you see we kicked against it. So if we'd got in here and our stop loss wasn't sufficiently high enough, that candle there at 12 would have taken us out. But then it's got a bit choppy as it's moved down, but they did hit the second target there. So obviously your stop losses and your targets are much tighter at the lower the time frames, but you can see the afternoon trend, as we saw on the higher time rate, is to the downside. So let's go back to our hourly trader, which is more my style anyway. So we're still very much in the money, and certainly the 30-minute was in a wee bit earlier. There's the 30-minute one getting in there at 11 o'clock. Stop loss up here somewhere, and down we go. So gold continues to move down, but again, signs of the run down here, certainly on this time frame, perhaps running out. So let's just have a look at you with scalping gold. I know a lot of you do that. Obviously, the big problem, guys, is obviously the volatility of big news announcements. And there's the Fed at 7 o'clock. 6 o'clock my time. But the trend, has been maintained. So the trend is moving. This is a trending market. It's not mean reverting. So this mean reverting strategy, it's not working. We're in the under half of the Bollinger Band. We're moving down. We'd want more of a trend following strategy, whether it's VWAP or the Heiken Ashing. So let's have a look at the crossing the old fashioned moving averages. So you can see here It's the hourly time frame. So we got a low this morning at 9 o'clock. It was nothing going on there. Breakout here at sorry, that was yesterday. Sorry, breakout this morning. Strong move up. There's that move up to through 4,000, through to the 4,024 resistance area, and then we've been down. And then this strategy, interestingly, on the 1 hour time frame, hasn't actually triggered short until now. And that's assuming it's still got 30. So it hasn't. This hourly strategy hasn't even gone short yet on the gold market. 30-minute will have been short. Yeah, 30-minute went short here at 3:30 this afternoon. Stop loss up above the turn. Yeah, see, so it's a big old risk reward on that one. Pulling your stop loss down a wee bit, but if you'd pulled it too close, you would have been hit by the volatility of the Fed. But it's still short. So as long as your stop loss wasn't too short, that's still in the money. And the 15-minute, a bit cleaner. But again, if your stop loss has got a bit too close, we closed above the. No, we haven't. See, we haven't closed above the mid moving average. So that's still short from the first initial short there at 3 o'clock. Sorry, 1 o'clock on that candle there. That's a nice big bodied candle to the downside. Stop loss up here again initially. So down we go. Then we went down again here. So you might have pulled, you would have pulled it to the top of the entry candle at that point on that big down candle. It might have even pulled it down a bit closer, but you would have been stopped out on the 4 o'clock. But again, you'd have had a chance of a re-entry here at 2:30, and then another re-entry here. So it's a big, strong move as we went back under 4,000. Or again, many would have been targeting 4,000 as a get-out area, but this trending strategy is still short. And again, if you got you might have closed it. Or certainly, I would have closed it. Wait for the Fed noise to die down. As you can see, the buys are still to the downside, so you could have re-entered there on the conclusion of that at 18:15 after the noise of the Fed was finished. That candle was finished, and your stop loss either up there now or at the 9-period moving average, but that is still short. We're still moving lower on the gold market on that time frame. So there we go. Just to recap, we got the chair starting his. And I'm going to go off and have a listen to that. Starting his press conference now. We might get called about Schmidt. He's just coming to the podium, I think. Let's have a look what I've got. Okay, I've got a move. We obviously had a stocks of so basically, so gold has continued to unwind. Dollars lifted a bit on that Fed announcement. Stocks. Let's go back to the stock markets. The stock markets. I'll go back to my. It's got the where we our open positions. The stock markets there. We pulled up the. Let's go back to the open ones. So Dow and the Nikkei, the ones we've got open. We have. I've got to the 4-hour time frames. Our stop loss now was dragged up again today. We're at 47,470 is our stop loss. I might drag it a wee bit higher again. We've come down a wee bit, so 47,535 now. Just shy of the 20-hour or on the 4-hour time frame, the 20-period moving average. So that's a strong candle, isn't it? So anyway, that's we're locking in lots of profit there on the Dow. Same with the Nikkei, moving higher. I might move that. That is more or less there. I might. We'll see how it's closed now. So it's close enough, isn't it? 53.94. So under 50,400. The stop loss on the Nikkei, and again another one we got in at 49,687. Lots of points, obviously, but percentages. It's a percentage plus. It's still a good trade. It's a good move. Powell's speaking. Nothing's changed. Nothing of any surprise. He's now saying disinflation appears to be continuing for services. That's something we knew. The energy costs have come down as well for goods somewhat as the prices come down, but that's starting to show some signs of life. But the trend still remains to the downside for the oil price in particular. Let's have a look at the oil price. What I'm talking about, that which composes a significant portion of services inflation. So, I had to trade on that, didn't I? I forgot about that. Look how that went. I think it was from last night, wasn't it? But let's actually go at the daily trend. So we'd seen some life last week. We went down to this 56, 50, 57, under 58, 56.50. We'd got as low as last week. We had a rally and a spike on the new sanctions on by Europe as well as Trump on the two big Russian oil companies. We rallied back into our $62 area, but then we ran out of steam. And Monday we were down. Tuesday we were down significantly. Yesterday on those private inventories, big drawdown, and we're struggling at $60. So we're down short again. I forgot about that. I can't remember. I think I was short, wasn't I? On the oil, is that it's a loser? Yeah, stop loss. Some reason stop price. We were short. No, we're still hard. Stop loss a bit too close. Anyway, I was demonstrating something to somebody, and it was the oil market yesterday. Overall, obviously, it's still weak because we're under this key 62 area. See that channel there from the summer, the low area here, which is what we've been talking about. I won't put it on again. Trend single ticks. Just my head in. So whether we get back to 58 or not, we've had 4 days down there testing that low. So we got these double low. So we might, things pick up. We might see a tick up. So Powell's just said rate cut in December is far from a foregone conclusion. Remember, that's what I was saying about with Schmidt. That's what I was saying with Schmidt being a dissenter. But this, the CME number actually ticked up from that 84.6 to 84.4 to 84.6. And let's just see what that looks like now, given that this is the next meeting now, and the fact that that was said in the press conference and obviously been discussed in the meeting. It hasn't updated properly. That's today's meeting. Only a 90% chance of a rate cut. 84.1. So therefore, we've gone back down a tad on the announcement. So, but it's still less than it was a week ago, but still significantly higher than it was a month ago at 84%. So it still looks like the consensus will be another 25 basis points cut. Lots of political pressure still to come on Powell. I'm guessing by then, certainly by the 10th of December, we will know who the next Fed chair certainly would be nominated, be public. And Powell, and Besant and Trump will be mentioning their names more than once. Obviously, the issue with the shutdown is getting quite critical in the next week or so. The food stamps start to bite. That hurts perhaps Democratic states and governors more than the Republicans. But Trump is in no rush to fix this. He's going to use it as a lever to cut jobs permanently, let alone people on furlough. But as his popularity sinks, he's doing more for his core all the time. So the core get more, MAGA core get more emboldened, and he's obsessed with tariffs, isn't he? It hasn't worked for other presidents in the past. Let's see if this change of the global trading world sticks with Trump around. And chatter this week from one of his confidants, Steve Bannon, another felon, for a third term from Donald Trump. America needs Trump. In an interview with The Economist, he said, the world needs Trump to have a third term. That means changing the constitution. So he's getting a bit more like Putin and Xi. But it's here. Anyway, things still to look forward to tonight. We've got Meta, we've got Apple, not Apple's tomorrow. We've got Meta, Facebook group reporting their earnings. We have Google, Alphabet, their holding company, in B shares for Google, and we got Microsoft all reporting after the market closes in a couple of hours. This AI trade is just absolutely tanking along. So we'll see where we go. Powell's just said it, his press conference. Just been asked a question here. There were strong differing views today. Obviously, we had the Schmidt who didn't want any cut at all. Consensus was for 25 basis point, and obviously Myron had his word about the 50 basis points. But December's still up for grabs, he's saying, as we can see here, 84% as far as the CME is concerned. But what data have they got to go on? There's no official data, so markets are a bit weary about that. I think stocks will have cooled. Seem to have cooled on some of his comments. If we just look at the Nasdaq, that's the daily, so we're still massively strong. But if we just come down to the 5-minute time, there we go. That comment about we haven't made a decision about December, and the descent is continuing, has freaked out the Nasdaq in particular, S&P. So there we go. It's not a massive move because it's only 5. Well, it's a massive move if you were short that one. Well done. Try and get your position closed, but yields are moving higher as stocks move lower, and the euro dollar on those comments. Euro USD. Let's have a look at use that as a typical example. So dollars spiked up. So stronger dollar on what our chair is saying. Logic going forward is a different thing. So he's obviously getting questioned about the lack of data, being such a data-dependent Fed, and Powell himself has been a big advocate of pushing that mantra. Markets reacting accordingly. Stronger dollar. Gold will also have added to that leg lower, so those shorts we had on gold will be nice. There we go. Down we go again. 4950 has been breached. 4950 has been breached on gold. We're back to where we were earlier this morning. And remember, we got buyers at 490 this morning. Having given up the rally over 4,000, we are moving lower again on the gold market as the dollar's picked up in particular, and yields spike high, especially the short term. The short term's gone to 35817. So 35817. The 10-year will be back over 4 potentially. Yeah. So the weakness of the 10 years 405.45. Obviously the lack of data, particularly around the jobs, although there's obviously some, I said there's the ADP numbers, there's the Michigan University of Michigan sentiment for inflation and consumer sentiment, and that was strong again this week, wasn't it? The housing data we've seen is still coming out. That seems relatively strong as well still. So the economy is still good, but we've got this big polarization of those with good jobs, key jobs, doing very well, much better off than they were going into COVID. Those with less, more vulnerable jobs, less well off. And there's a big divergence. That's what the banks are saying. That's what the banks are reporting. And obviously, they're close to their customers, even without the official data to go on. So anyway, I've been chatting for an hour. I will wrap this up unless there's something else anybody wants to have a look at. So in summary, the Central Bank of America, the Fed, has indeed cut rates as expected by 25 basis points. No particular surprise there. And also talking about no surprise about finishing their QT, their quantitative tightening cycle by the end of November. 1st of December, they will get rid of that. Will all be off their books. The surprise really for me was, and for many I'll guess, is that one member of the voting members of the Fed, Mr. Schmidt, voted for a no change to keep rates at 4.25. The consensus was for 25 basis points, and then there was Stephen Myron, Trump's man on the Fed, wanting 50 basis points and talking about more to come in 2026. Certainly, there will be more to come in 2026 because we'll have a much more compliant Fed chair, regardless. Well, a more compliant with the president views. How compliant he is, we'll see once he's got that. Because the markets cherish the independence of the Fed and all the central banks that are independent. Otherwise, you get situations like you see in Turkey and Russia and other parts of the world. Anyway, on that note, I will leave you with a falling gold market. Stock markets also rolling over today. Stock markets, at all-time highs still. And let me leave you with our Dow trade. We've been taken out. There we are. I pushed it up too aggressively, some would say, but there we are. Our Dow trade has been closed on Powell's comments around the expectations of more rate cuts to come in December or not. But the markets are still, the fuss will die down. But that's our Dow trade taken out. Has it impacted the Nikkei as well? No, not less so, obviously, as you might expect. Certainly on our platform anyway. So our Dow position is closed. We had a number of trades earlier today or last night. Let's go through them. The euro, actually, let me show you with them last night's trades. Those of you that follow me. So there's last night's positions. I don't know if you can you see that? Let's zoom that up any higher. How do I make that bigger? I can't make that screen bigger, can I? Can I? I thought I could. Oh, anyway, can you see that? I don't know if you can see that very well, actually, my friend. Let's just get rid of that God's battle. Where's my caption gone? So pound yen hit target one. We got 30 pips out of that. Stop loss was lower to well, actually, let's have a look at that. What's that's doing, shall we? Because they're actually open now. So that's been taken out because we've moved that one up. Pound. It shouldn't have. The yen might have moved on that. In fact, they both might have moved on. It hasn't. It's lost my stop loss. What did I say the stop loss was? Stop loss now lower to 201,475. 201,475. 201,475. Looks like that's been taken out. This is the far. Oh no, this is that. It might have come out to just 7.5. Delete. So unless this was earlier today. So unless that's happened in the last 5 minutes, it's just the 15 minutes. So the Fed announcement has closed that one out as well. So that's completely closed now. Pound Swissy, pound yen, that's closed now on that. So that's closed completely. Dollar yen reversed to entry. We hit first target, but then it reversed and stop loss has been pulled down to entry. That was fully closed. That Swiss yen and dollar, Swiss and euro, we were out of the money first thing this morning. Remember, these also ones. So I checked these first thing in the morning. So I closed the Swissy for an 18 pip loss and the euro for a 11 pip loss, and the stop loss there 4755 on the Dow, as we've just seen, has been hit. So that's closed now. So let me leave you with that. Dow position closed out now. Let's go up to the 4-hour time frame. So having got in here, whoops, at 46,408 on the night of the 20th. There's 2 trades on that night, if you remember. Our target one was hit at 47,251, and our stop loss dragged up, perhaps a bit too close, but there we go. We're down, we're out, we're banked the profits. It is nearly the end of the month. Remember, I had 2 losing weeks in October. It hasn't consecutive losing weeks. It hasn't happened as long as I can remember, but we are going to win. We are going to close October in the money. It's not guaranteed, but 47,535 was our closing. So we made a healthy second part of that trade as well. So that one's now completely closed. On new trades tonight, we'll still see. Let it all cool down after the movements of the Fed announcement, but I will check later on. So come back later on tonight in a couple of hours, and we may have some new trades for tonight. Okay, take care, my friends. We'll see you all again tomorrow. Tomorrow is the ECB, so it's a busy, massive, busy week. The news doesn't stop. Obviously, tonight, more importantly, Meta, Google, Microsoft, Apple, and Amazon report after hours tomorrow night, Thursday the 30th, end of the month on Friday as well. Trump meets Xi tomorrow as well. He's done a trade deal with South Korea today as well. He's having a ball. His tour de force is rolling. He's loving all of this interaction. He loves meeting people, handshakes, doing deals. Will be his undoing. And let's see where these tariffs actually end up. Because remember, businesses are dealing with it, and consumers are the ones that are paying it, not. And the government are collecting these tariffs of importers. So anyway, see how it all ends up. But it's all going a bit Goldilocks at the moment, so it could be a bit of a spiky end of the year after all. But we'll see. The AI numbers are mental. The investment is absolutely off the scale. So is the return going to be off the scale as well? That's really the question that remains. Anyway, I'll see you tomorrow for the ECB around about lunchtime, our time. If you're new to the prop trade, we've got this. We have this offer on at the moment. Spooky 20. I'll just come to our announcements channel. There we are. There we go. Halloween funding frenzy. Love the alliteration on F's. Halloween funding frenzy. 20% off. All our challenges save the $100 account, $100,000 accounts, but all the other accounts you get 20% off with Spooky 20. So to do that, you simply go to hang on, that's me, a coupon. So if you put in Spooky 20. You apply the code, that should get you a 20% discount. So if I was getting another $25,000 account, I get a $35 discount for $140. If I wanted a $50,000 that brings it down to $276 from $345. So $25,000 is a very popular one for $140. So there you go. It's available to everybody to use at least once. $25,000, nice sort of size account. Certainly if you're trading Forex to play with. Obviously, if you're a big player, try the bigger accounts. Obviously, the percentage target is still the same. The returns can be bigger, but you got to manage it equally as well. But if you can manage these demos, these simulated accounts, you can certainly manage real money of your own, and that's the beauty of the prop trade. Get to funded account stage, you can start to withdraw some serious amounts, and there is no ceiling to this. If you do it in a proper, structured, sensible way, with don't try to be clever, don't try and be too cocky, don't try cheating us. We'll find you out. So anyway, take care, everyone. I'll see you tomorrow for the ECB, and back to listen to the Fed chair moving markets again, as is his one. Down goes the Russell. I'm just seeing the Russell here. So rate cut in December. Far from a foregone conclusion. Panic. Far from foregone conclusion. So there we go. Another alliteration. Far from foregone. Down goes stocks. Up goes the dollar. Up goes the yield curve. Take care, everyone. See you tomorrow. All the best. Bye-bye.